Let me quickly talk to you about how to get approved for a car loan no matter what. I'm speaking about things that no dealer will ever tell you. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about how to get approved for any car loan, no matter your credit or the car's value, model, or make. For car loans, you have to understand that personal credit is not really as critical to the lender as it is for an unsecured loan, right? Because at the end of the day, what is a car loan? A car loan is a collateralized loan, aka secured loan. So the bottom line here is that if you default, the lender will simply repo the car, no questions asked. So because of that, dealers have an incentive to oversell cars, what I call overselling vehicles. In other words, they want to sell you as much as possible in terms of the car itself, but also add-ons like warranties and gap insurance. I'll speak about that later on. But before I get into the actual step-by-step, let me say three quick things that are very important. Number one, please beware of 7-year car loans. Everybody wants to get a 7-year car loan. Yeah, I'm getting my loan for 7 years. You know what? That's a trap. It's a trap. It is a really dangerous trend in our view because you are just tying yourself into debt and over indebtedness for 7 years. Get a 5 years. You want to get a 5-year car loan. That way, that will force you also to rearrange your budget in the short term so that you don't actually just trigger a never-ending cycle of indebtedness. So this is a trap. The 7-year car loans, really, it's just, and I'm not even speaking about just the cycle of indebtedness. You also have massive interest, right? So if you're paying a car over 5 years versus 7 years, you're going to end up paying a lot more in interest and other fees if you have a 7-year rather instead of a 5-year. So that's the first thing. The second thing I want to say is that you can qualify for a car loan with bad credit. Yes, you can. As I said earlier, a car loan is a collateralized loan. It is a loan that is tied to an asset. So it doesn't matter. So your personal credit doesn't really matter. Of course, it matters a little bit in terms of the interest rate they are going to give you at the end, but it doesn't really matter that much. So you can get a car loan with bad credit. No problem about it. And the third thing I want you to do is, regardless of the loan that you get, please, before you actually sign the paperwork, you want to test drive. Very important. A lot of folks nowadays want to buy cars online. That's pretty cool. Don't get me wrong. I love the trend. I love what Carvana and Drive Time and other players are trying to institute. The trend is fantastic. But a car, you're going to have a car for many years. You want to test drive this baby before actually buying it. Very important. Okay. Now that I've said that, let me just get into the actual step-by-step. So to get approved for a car loan, no matter what, no matter your credit, no matter the vehicle's make, model, or value, the first thing you need to do is you need to get your numbers right. What is that? You need to get the numbers right. I'm talking about your current budget. You want to pay attention to your current budget, your current debt level, right? Everything from mortgage, student loans, credit cards, this is very important. You want to pay attention to your overall financial situation. So you got to prepare your financial statements, your income statement, your balance sheet, and your cash flow statements. Why do you have to do all of these things? Very simple. You want to have a DTI, a debt to income ratio that is this is an important metric, and you want to keep it as low as possible. You want to keep it below 40%. The lower your DTI, the more you are likely to save on interest, okay? And DTI just means you take your total debt and you divide that by your income. Because at the end of the day, When you do this, when you actually perform this analytical journey at the financial level, at the personal financial level, you are going to be able to answer a few questions. Can you afford the car that I want to buy? So can I afford the car I want to buy? Am I purchasing too much vehicle? Should I lower the car amount? Should I buy used or new? Okay, so this is the kind of this is the constellation of questions you need to ask yourself, and that will help you make the right decision. And no dealer will ever tell you this. You got to have a source of income, whether or not you go for used versus new. You got to have sources of income. Things like if you are a W-2 employee, you got to have a way to save money. You have to think about whether you want to consider getting a co-signer, right? Because if the car amount is high, but this is the car you want, this is the car you need, maybe for work purposes or for family purposes, you have a child or you have children, you have people to drive around, then you want to consider actually increasing your chances of getting the loan. So consider getting a co-signer, for example. And remember that you should never buy too much car. You should consider using getting a used car to save a lot of money. Yeah, why not? To save more money, there are things you need to do. First, you want to use a calculator to estimate loan payments. There are a lot of calculators on the internet, but we love the one from Bankrate, and we're showing this on the screen right now. And it's a very simple one. It's user friendly. We love it. And optionally, you can check the amortization schedule for the loan. In other words, you want to see how much you will have to pay every month in terms of payments. The bottom line here is that you want to increase your income and lower your debt so you can have a low DTI at least 3 to 6 months before buying the vehicle. So you got to do this preparation at least 3 to 6 months before buying the vehicle. Step number 2, you want to get your credit right. So the first step is get the numbers right. Step number 2, get your credit right. You want to check your credit reports for inaccuracies or fraud. You want to do this for all 3 credit bureaus. Remember that you have a free report once a year. They're free at the annualcreditreport.com. This is something that Congress has mandated, so you don't have to pay for it. And if you identify some derogatory or inaccurate items, you want to dispute and try to remove them. You want to remove any unauthorized transaction or derogatory item like repossession, hard inquiry, charge-off, or collection. Okay, and one thing you also want to do is in thinking about taking care of your credit is do not take on a large debt 3 to 6 months before buying a car. Okay, so you constantly want to work on your credit before applying. This is a great exercise. And remember, the idea here is to lower your credit score. To lower your DTI and increase your credit score. Okay, to increase your credit score, you have to understand the 5 elements that constitute a credit score. What are the 5 elements that constitute the fulcrum of a credit score? So you have payment history, right? This accounts for 35% of your FICO score. Again, FICO is the credit score used by most lenders. You also have Vantage score. So, but we're going to talk about FICO score here. So payment history, the amounts owed. This accounts for 30% of your FICO score. So amounts owed is also your credit utilization. You have the credit history length. This accounts for 15% of your FICO score. You have your credit mix. This accounts for 10% of your FICO score. And new credit all accounts for 10% of your FICO score. So to clean your credit, you can either DIY it, do it yourself. You can hire a private company where you pay like $50 to $150 a month, or you can reach out to a nonprofit, and their services are free in most cases. So the bottom line here is that you need to clean your credit report at least 3 to 6 months before buying the vehicle. Number 3, folks, you want to get pre-approved. This is so important. Getting pre-approved for an auto loan before you walk into a dealership helps you gain leverage, and leverage is very important when you speak to a dealer. It helps put you in the driver's seat during the car buying process. Let's just define a little bit what we're talking about here. A pre-approval is conditional approval given to you from a lender with estimated terms, such as the amount of money you can borrow, the interest rate, and the loan term. And this will help you finance the purchase of a car. And this loan quote makes it a lot easier to estimate the total cost of the loan and to create a budget before you start shopping. Think about the freedom, right? The peace of mind you can have by having a pre-approval. Because at the end of the day, a pre-approval is a great way to let dealers know that you are a buyer who has done your homework, and this is what you want. Also, if you happen to be pre-approved, you don't have to rely on dealer financing. You know, the whole thing about buy here, pay here, or those schemes, you don't have to rely on that. And this could give you, having your own funding sources ready, can give you greater negotiating power at the dealership, greater negotiating leverage at the dealership, and which can make the whole car buying process less stressful. Okay, it's very important. And remember that it's not really complicated to get pre-approved for an auto loan. No, this can be very easy. If you have prepared, if you have done the work, if you have done the homework, if you are prepared with the application documents, if you have a healthy credit history, if you have saved, this should be fine. And having a pre-approved car loan is fantastic because it gives you an idea of how much you can borrow. You can focus on the car. You'll have negotiating. You have greater negotiating power. Okay, so this is important. And in addition, you're able to actually focus on the car. And this is what I want to say. It helps you set foot in a dealer's lot with confidence. And this is what you want. And the thing is that if you don't get pre-approved for a car loan, there are things you can do. You want to build your credit. You can consider getting a co-signer. You can consider, as I said before, lowering your debt-to-income ratio. I'll be right back, y'all. After this, don't go anywhere. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. We are having a conversation about how to get approved for any car loan, no matter what, no matter your credit, no matter the vehicle's model, make, or value. Number 4, I want you to get a down payment ready. It's so important. So important. Making a down payment or trading in your current car actually reduces how much you have to borrow and can make it easier to get approved at a lower interest rate. So when we talk about down payments, the down payment can come in the form of cash or an asset. So either you have the down payment or you have a trading. In other words, you're selling your car. So what is trading? So let's first talk about down payment. So a down payment is cash that you give to the dealer or seller to help cover a portion of the sales price of the vehicle. So lenders tend to view borrowers with down payments more favorably because it means that those borrowers, they have skin in the game and they are less likely to default. And the same applies for the mortgage process as well. And what is a trading? A trading is any vehicle with value that you offer a dealer in exchange for credit, and you want that vehicle to go toward the sales price of the car you're buying. For example, if you're buying a $25,000 car and you're trading your current car for $10,000, you only need to borrow $15,000 on the new vehicle. That is, if you don't have a loan on the original car that you need to pay off. Okay, and having a down payment ready carries with it a bevy of benefits. So you'll pay less interest. You may get approved for a loan more easily, right? Your monthly payments could be lower. You might qualify for special programs depending upon the states where you live or the lender, and you can offset depreciation. And there are a lot of things you can do to actually save for a down payment. But the whole thing is to look at your budget and find ways to actually either reduce expenses or increase your income, right? So reducing expenses, you can skip vacations for a year. You can reduce your high interest rate. You can reduce your daily expenses, food, entertainment, that kind of stuff. Or you can increase your income. You can get a second job. Okay, you can borrow from your retirement plan. This is not really an income, but it's a source of financing. Or you can sell some of your investments. In other words, you are raising cash. Step number 5, folks. You need to get busy researching. What is that? It means that when we talk about car loans, there are certain things you need to pay attention to. And in other words, you want to actually evaluate the car loan. And there are some criteria you need to use to properly evaluate a car loan. What are the factors to consider in an auto loan? You have the annual percentage rate, the APR, right? This is crucial because the APR is the amount of interest you will pay on your loan during its terms, and they could mean a difference of hundreds or even thousands of dollars. Because think about it. If you have a higher APR, you'll pay more interest and have a larger monthly payment. If you have a low APR, on the other hand, you save a lot of cash on interest and pay, guess what? A smaller payment each month. You also want to pay attention to the monthly payment. This is another criterion you need to pay attention to when it comes to choosing a loan. Next, you want to think about the loan term. So the loan term is actually the length of your loan. So the average loan term for a new car is about 5 to 6 years, sometimes 7 years. You know, the 7-year loan term that everybody's trying to sell to you. And but so the bottom line here is that if you have a longer loan term, you are having a lower monthly payment, that's for sure, but you will end up paying more interest over time. A short loan term can help you pay down your loan faster, but your monthly payments will generally be a lot higher. So those two elements are inversely correlated. You have to think about the one that works for you and works for your budget at this very moment. You want to, another way to judge, to evaluate loans is the loan amounts, right? This is the total amount of cash that you borrow for your new or used car. And some platforms such as Carvana or CarMax or Drive Time, they have limits on the loan you can get. So it's up to you to actually find that. You have to think about the penalties and fees. Okay, you want to think about also whether there is a processing fee for the loan. So this is very important in terms of how you analyze the loan you are about to get. Number 6, folks, you need to get the right car loan. And when we speak about car loans, there are several ways. And I first want to talk to you about so you can get a car loan at a local dealership, at a credit union, at a traditional bank, through an online lender, or through online dealers such as Carvana and Drive Time. Let me first talk to you about how to get the right car loan at a local dealership. So when we speak about local dealership, you have two options. Essentially two options. Either the dealer reaches out to a network of lenders or offers you in-house financing, also called buy here, pay here, so BHPH. And so what are the benefits of in-house financing dealerships? So the thing here is that you get the loan quicker because the dealer has an incentive to sell to you, right? Their job is to move vehicles out of the lot as soon as possible. So they will work their ass off. They will work painstakingly to make sure that they get the financing you need. So you have this opportunity to get approved fast, whether you have bad credit, no credit, or low credit. So that's the big part of the buy here, pay here, the in-house financing. There are drawbacks. If you get in-house financing, there are a lot of things you have to think about. First, you will likely pay a higher interest rate than you would with a traditional car loan. And the loan may even be a pre-computed interest loan, which can be a big financial pitfall. And on top of that, you have actually, you only can buy from the dealer's inventories. So if they don't have the car that you're looking for, this is tough because it means that you are getting a car that you don't like, and hopefully, and then most probably you're not going to keep for a long time. So why not look for a car that you actually love and you can keep for a long time? Another drawback here is that based on our analysis, some people have said that some dealerships might put some tracking devices into the car so that they know exactly where you are at all the times. And so they might repo the car if you default. So this is something you need to think about. And in some cases, the dealer might also reach out to a network of lenders. So they do maintain a database of lenders they work with, and they might reach out to that lender. Either way, whether they actually provide the financing in-house or reach out to a network of lenders, you're not getting a good deal. Because even if they reach out to a network of lender, they're still adding their little commission on top of the transaction. Because either they're being compensated by the lender, or they just are paying you, they just are getting the cash from the loan, the amount of car, the loan amount they agreed to, the value of the car. So, and also they might want to sell you add-ons, things like gap insurance, warranties, and all that kind of stuff, right? Tire protection plans, paint protection plans. So dealerships makes a lot of money on this stuff. So besides local dealerships, there are other places you can get a car loan. And these places, in our view, are way better than getting a loan at a car dealership. For example, credit union. Credit unions are part of our favorite when it comes to getting a car loan. And for example, we're showing you on the screen, you have a car loan from Navy Federal Credit Union. Great car loan, fantastic. You can get the car loan from a traditional bank, for example, Bank of America. You can get a car loan from an online lender, for example, Lending Tree. Or you can get a car loan from an online dealer, Carvana Drive Time. So which is best? So I've given you 5 outlets, 5 ways you can get a car loan, right? And it's important to know the pros and cons of each outlet so you can get the right car loan, whether it is at the local car dealership, credit union, traditional bank, online lender, or online dealer. Things you have to understand is that based on our analysis, it's better to get a loan, a car loan, at a credit union or traditional bank if you have already a relationship with the institution. If you have an account with them, if you have other loans with them, then they might give you a discount. And the thing is, with a loan from a bank or credit union, you have flexibility. You can choose the car you want. You can actually, you have bargaining power. You can go to any car dealership you need, and you can actually get the car you need. With an online lender, you might also be lucky if you have good credit. For example, Lending Tree, they do a fantastic job. They can give you a loan with a very low APR. And in our analysis, we have also seen that Carvana, Drive Time, and CarMax, among others, are also great choices. In other words, when it comes to buying a car or selling a car, they're great choices. And they have a very streamlined process in place whereby you do everything. You can do a trading. You can buy a car from the comfort of your home. So this is pretty good. All right, folks. Thank you so much for your attention. I really appreciate it. I was talking to you about how to get approved for any car loan, no matter what. Things that dealers will never tell you. So I was talking to you about the 6-step plan. Number 1, get your numbers right. Number 2, get your credit right. Number 3, get pre-approved. Number 4, you want to get a down payment ready. Number 5, you want to get busy researching. And number 6, you want to get the right car loan. Thank you so much for your attention. I really appreciate that. I will see you next time. But until then, remember, stay marvelous.